Donate, pledge, back. These are the sorts of words that people tend to use when they give money to Kickstarter campaign. And it makes perfect sense because Kickstarter uses phrases such as bring a creative project to life prominently on their website. But running a Kickstarter is a business, full stop. In the IRS, it makes no distinction between funds raised on Kickstarter or any other crowdfunding platform and plain old business revenues. That means that like any other business, you're required to comply with tax regulations and obligations. Now in the United States and a lot of other countries, the funds you raise on Kickstarter are considered taxable. As a creator, your profit, that's the amount you have left after deducting costs associated with the rewards and fulfillment from the total raise, that is subject to income tax. Are Kickstarter funds taxable? The short answer is yes. But as you'd expect, there is a lot more to it than that, which is what we'll briefly cover in this video. We're going to focus on taxes in the US, but know that a lot of other countries follow similar rules. And as a quick disclaimer here, we're not accountants. We ship Kickstarter orders, so this video is for your general guidance. You should really reach out to a professional tax advisor or accountant for information tailored to your specific circumstances. My name is Brandon, here on behalf of Fulfillrite. If you need help shipping your orders, go to fulfillrite.com and request a quote. We've shipped thousands of Kickstarters and we're happy to help you ship yours too. The quote doesn't cost a thing, so if nothing else, you get some good information on pricing. Link in the description. But enough self-promotion. I said a second ago that Kickstarter funds are taxable, but why are Kickstarter funds taxable, and what does that actually mean for you? When it comes to making money, the IRS recognizes that there are different reasons why your wallet might be getting bigger. So they categorize financial transactions differently, which includes gifts, donations, and income. Gifts are generally not considered taxable for the receiver. They are typically given out of a disinterested generosity, such as a birthday present without any expectation of getting something in return. The refund that you got on that live, laugh, love sign that you got from your great aunt, thank heavens, falls into the gifts category, according to the IRS. But on Kickstarter, you're expected to send a reward back, so the money you receive is not a gift. On the other hand, there are also donations, which are usually made to non-profit organizations. For the most part, these can be deducted from the donor's taxable income, but for the receiver, if the organization is not a registered non-profit, like a 501c3 or something like that, these donations usually consider taxable income. Now that doesn't apply to Kickstarter projects, which cannot include campaigns for charity. That leaves only the category of income left, and that's the money you receive in exchange for goods or services. This is taxable, and you have to report it on your annual tax return. According to the IRS, money raised on crowdfunding platforms like Kickstarter is generally considered income. Fortunately, since Kickstarter campaigns are generally considered businesses, you can usually deduct business expenses from your income, and that will dramatically cut down on your tax liability. But you should really consult with a tax professional to understand what expenses you can legally deduct. And plus, their help will often end up paying for itself because they're good at spotting deductions. Now, really briefly, let's make time for a quick aside on sales tax. Okay, so everything I've talked about so far concerns federal taxes. But if I didn't tell you about sales tax, you wouldn't be getting a complete picture. Long story short, if your Kickstarter campaign involves selling physical products, you probably have to collect and remit sales tax. This usually applies when you have a physical presence or a nexus in the state where the product is delivered. Each state has different laws regarding sales tax, so it's advisable to consult a tax professional. If you need software to help you keep track of this sort of thing, Avalara and TaxJar are good options. Okay, with all that in mind, let's talk about filing requirements in the US. So in the US, the IRS requires Kickstarter creators to file a 1099-K form if their campaign reaches a certain threshold, over 200 transactions and gross payments exceeding $20,000 in a calendar year. But starting in 2024, in that tax season, the threshold is going to drop to 600 regardless of the number of transactions. So basically, you have to file this form. It comes from the payment processors, not Kickstarter itself, and it reports a gross amount of transactions for the year. If you meet the $600 threshold, you'll receive a 1099-K by January 31st of the following year. Long story short, if you get this form in the mail, file it with your taxes. It takes very little extra effort and is generally not worth stressing stressing out about too much as long as you just make sure you file it with your taxes. Regardless of whether you receive a 1099-K form though, you'll need to report any taxable income derived from your Kickstarter campaign to the IRS. And the way you do this depends on your business structure. So if you're operating as a sole proprietor or a single member LLC, for instance, you'll most likely need to report this income on your 1040, specifically on the Schedule C. That's a profit or loss form for a business. This form is how you report your income or loss from a business that you operated or a profession where you were a sole proprietor. Filing a Schedule C, I won't sugarcoat it, it's going to take some work and it will require you to keep some clean accounting books. You should probably keep a separate bank account and use accounting software like QuickBooks or Xero with an X on a weekly basis to make sure part of tax filing is easier. You'll be glad you did it. Now, if you're operating as a partnership, corporation, or have multiple members in an LLC, you really need to ask a tax advisor about the filing requirements because they get fairly complicated. And no matter what kind of business you're running, make sure you comply with state income tax if you're in the US. Now, obviously, no one wants to pay more taxes than they have to, so let's talk about reducing your tax burden with deductions. You might be worried that if you file Kickstarter revenue on, say, your personal taxes, you'll owe a very high percentage of that to the IRS. In practice, though, you'll only have to pay taxes on profit plus expenses that you can't deduct. Qualified expenses related to your Kickstarter campaign can be deducted from your taxable income. These might include costs for product development, marketing, shipping, and even certain home office expenses if you're working from home. Note that these expenses need to be both ordinary, that's common and accepted in your field of business, and necessary, which is helpful and appropriate for your business. To take advantage of these deductions, make sure you keep detailed records of all your Kickstarter related expenses throughout the year. This will not only help you at tax time, but also provide a clearer picture of your campaign's financial health. So to bring it all together for a quick recap here, yes, your Kickstarter funds are taxable. Residents of the US will owe federal income tax at a minimum, and possibly state income tax and sales tax too. However, the filing requirements are usually not too terribly complicated. They will generally be very similar to what other business ventures need to do anyway, and most Kickstarter creators will need to submit a 1099-K form. Sole proprietors or single member LLCs will typically report income on the 1040 Schedule C. Don't let these taxes scare you off. People launch Kickstarters all the time, even knowing that they'll have to deal with taxes like this. Even watching this video, which is very, very high level, you're going to go in thinking about this in advance, and your ability to plan accordingly, that counts for a lot. So reach out to a local accountant and ask a few questions. They'll help you figure out exactly what kind of taxes your country, region, and city will require. They'll probably also save you a ton of cash too. A good accountant is pretty much a money wizard, so don't sleep on this advice. My name is Brandon, here on behalf of Fulfillrite. If you need help shipping your orders, go to fulfillrite.com and request a quote. We've shipped thousands of Kickstarters and we're happy to help you ship yours too. The quote doesn't cost a thing, so if nothing else, you get some good information about pricing. Link in the description. Now, if you enjoyed this video, please take a moment to like and subscribe. Don't forget to slap some postage on that bell so we can express ship new videos to you as soon as they drop. And last but not least, if you have any questions, leave a comment below and I will do my very best to answer them. And by the way, if you're watching this and you're an accountant and I missed something important, just let me know in the comments below. Given the sensitive nature of posting online information about how taxes work, I'll be pinning useful comments as I see them come in. Thank you for watching.